Hi, this is Tim Biggam back after another couple weeks hiatus and returning from Florida where the weather was heating up certainly down there, and returning to a market that certainly is heating up here. We see the Dow actually trading well above 15,000 today. We see the S&P firmly above 1,600. NASDAQ also making some nice strides, basically up about 14% across the board so far on the year on stocks. All that given the fact that earnings this quarter have come in fairly subdued, certainly have met the lowered expectations. Revenues absolutely on the light side. So again, manufacturing a little earnings growth with less revenues. At some point, I think we're going to have to get some of that organic growth back to plow forward, but when that will happen is anyone's best guess given the free money that is just being, created around the world. This morning we had Australia come out and cut rates, somewhat of a surprise. ECB certainly going all the way all in from their side. Certainly the Fed here has been all in for a while. So, it's that yin and yang between, stocks on fire because there's nowhere else to go, and our valuations justified here, especially given the fact that we're looking at maybe GDP of about 2% going forward for the rest of the year, and a lot of people calling for, earnings to come in. So at some point, valuations do matter, and I'm going to make a call. Valuations are going to matter somewhere around here. The price action we kind of saw today where the market again, was just screaming to the upside and had a pullback. We actually went negative briefly for the first Tuesday in 17. We've had 17 straight Tuesdays up. Another kind of anomaly here. We haven't had any kind of pullback in this market, to say the least, really since the beginning of the year. And since last expiration, we are up 5% on the market. So this thing is getting, in my opinion, a little out of hand, given the fact that the VIX is trading well below, that 13 level again, and looking like it's going to trade with an 11 handle. I am absolutely favoring buying some longer-term June puts here, using like the SPY, the 164 strike. You can look at the Qs, you can look at the Russell, whatever index that fits your portfolio or fits your trading profile better. But I think given the fact that we are trading at all-time highs, pretty much not on earnings, but on the fact that money is cheap, at some point that will come in. We're seeing margin debt at the highest level since, right before the financial crisis. So, using borrowed money to goose up stocks here. So all it will take is one little break here. And I think, probabilities favor that, it's a coin toss whether we go higher or lower here, but the magnitude of the move is what I'm looking at. So I think the payoff to the downside may be fast and furious given the profit taking. Everyone is sitting on a ton of profits here. And the upside, I think, will be a lot more difficult. Again, we're up 14% this year already, so to justify, being up even 20% this year would be hard to fathom. That's only another 6% over the next 7 months here. So I just think, again, flip a coin. I have no idea, to be honest, which way this market's going to head. It's befuddled me and a bunch of other people. But I'm looking again at that kind of asymmetric payoff. I think the downside move, if it does come, will be a lot bigger than that upside move from here, given the fact that we're up this high. And given the fact that the VIX is so low, it doesn't hurt as bad to, be holding on to puts at these levels here. So I'm just outright put buyer here. I think as portfolio protection, it absolutely makes sense. You can take a look and kind of put a floor on your gains in your portfolio. And also as a trade, I am just outright buying puts. Usually I'm a spreader. As you guys know, I tend to be, a little more cautious. But given what's happened here over the past 2 weeks, and especially given the NFP report, which, was met with a great rousing cheer. But when you look inside, average hours worked actually went down 0.2, which equates to the fact that wages were actually less last month than the month before, but why should that rain on the parade? So a lot of divergences here going forward, and I just think at some point it's going to be met with one of those bad hair days. So I'm buying some puts, and I may be wrong, but it doesn't hurt nearly as bad as it would have a couple months ago. So until next week, this is Tim Biggam, I guess the one who's raining on the parade here, saying as always, keep your position sizes right and keep your stops in place. Take care. Bye-bye.